Okay, so let's dive in, folks. Welcome to the deep dive. And w- have you noticed this is like kind of a head scratcher? Mortgage applications are going up for people who want to buy homes, but at the same time, mortgage rates, they're not really going anywhere. I mean, they're just kind of sitting there. So, uh, what's going on here? Like, what's happening under the surface of the housing market to explain why this is happening? It doesn't really seem to make sense at first glance.
Yeah, that's a great point. It is a bit of a puzzle. I mean, on the surface, doesn't seem logical, but we're going to try to figure that out today. And yeah, you're absolutely right. It's not immediately obvious what's driving this, but I think by digging into some of the recent data, and particularly, we're looking at this article from National Mortgage News by Spencer Lee. I think this will really help us understand, the dynamics at play here. And this article, it zeroes in on this weekly survey from the Mortgage Bankers Association, the MBA, which is really, a key indicator because it tracks the volume of mortgage applications that are being submitted, week to week. So it gives us a really timely snapshot of what buyers and homeowners are actually doing out there, in real time. So today our mission is to break down these trends for you, and hopefully, by the end of this, we'll all understand a little bit better what they mean for the housing market, right now.
Yeah, exactly. We want to make sure you walk away with the real insights, but without, totally overloading you with information. And okay, so let's start with those mortgage rates. I mean, as the article points out, the average rate for a 30-year fixed rate mortgage was basically flat. It was sitting at 6.71% last week, which was just a tiny bit down from 6.72% the week before that. So, it's barely even moved. And this is actually coming after a period where we saw rates going up, for a while. So it seems like they've kind of hit a plateau for the moment.
Yeah, that's right. And that stability is actually really important to understand, the bigger picture here. We've seen some volatility with mortgage rates, lately some ups and downs, but, this recent steadiness, even though it's at a higher level than we've been used to, in recent years, it really sets the stage for everything else we're going to talk about. Keep this in mind as we start to look at who's actually applying for these mortgages,
Yeah.
who are the buyers out there.
Yeah. Which leads us to the really interesting part of this whole thing. Purchase applications are going up. I mean, it's kind of surprising, right? Because even the rates are stable, and they're relatively high. The MBA's survey is showing that applications to buy homes, they've actually increased for the second week in a row. So the purchase index, which is seasonally adjusted, it went up by 0.7% last week. And get this, that was after a 0.1% increase the week before that. So, clearly something's going on. There's some momentum building with buyers.
Absolutely. And what's really fascinating here is when you look at it year over year, compared to last year, the article points out that the purchase index is up by pretty significant 6.9% compared to the same time last year. So, that really tells you that despite, where rates are at right now, there's a real increase in the number of people who are, trying to buy homes. They're out there looking. And, Joel Can from the MBA had a great quote in the article. He said this was the strongest weekly pace in almost 2 months. So, that's a pretty strong signal that something's motivating buyers out there.
Yeah, you're right. So we've got this situation where rates aren't really dropping, but more people are applying for mortgages to buy homes. So what's the explanation? What's driving this kind of disconnect? And the article seems to point to one area in particular, government-backed mortgages.
Yeah, that's right. This seems to be a key piece of the puzzle here. The data is showing that FHA-backed mortgages, that's the Federal Housing Administration, they were a major factor in this increase. So the volume of FHA applications went up by a pretty significant 5.7% just week over week. And we're also seeing, more applications coming through the Department of Veterans Affairs, the VA. So, when you see this surge in FHA and VA applications, it kind of suggests that, first-time home buyers, maybe people with, more price-sensitive budgets, they're the ones who are getting more active right now. And, this could mean that we're seeing a shift in the market, maybe affordability in that conventional mortgage market. It's just still a really big barrier for a lot of people.
That is interesting. So it's not necessarily the traditional mortgage market that's driving this. It seems like it's more focused on, these government-backed options. And Joel Can from the MBA, he had this really insightful quote. He was talking about how loosening housing inventory and slowly declining mortgage rates have, presented this segment of buyers with more opportunities. And, I think that's a really important point.
Yeah, I agree. I think it's spot on because, if we connect this back to the bigger picture, it suggests that even though overall mortgage rates haven't fallen dramatically,
Right.
any little bit of easing that we see combined with, maybe some more accessible loan terms through these FHA and VA programs, is making it more realistic for some people to become homeowners. These programs, they often serve first-time buyers or people with different financial situations. So this increased activity for them, it could be a sign that a certain demographic is getting more empowered to buy a home. They're finally able to get into the market.
Yeah, that makes a lot of sense. And the article also talks about another really important factor here, and that's the number of homes that are actually available for sale, the inventory. And it mentions that the supply of both new and existing homes has gone up, from those record lows that we've been hearing about, for so long. It's been a really tight market. So how does this increase in inventory, how does that relate to this rise in purchase applications?
Well, it's a pretty direct connection. More homes on the market means that there are more choices for buyers. Right. And for a while there, we were in the situation where you had all this demand, but there just weren't enough houses for sale. And that, of course, kept prices high, and it probably, discouraged some people from even trying to buy. They just figured, why bother? But now, as you start to see the number of listings go up, even if mortgage rates haven't dropped that much, people who are waiting for more options, they might be finding properties that work for them, and, they're deciding to go for it.
Yeah, that makes sense. And this is where Mark Fleming, who's the chief economist at First American, he comes in with some really valuable perspective. He talks about how homeowners are finally, kind of accepting this reality of higher for longer rates, and they're deciding, okay, now is the time to listen, to put my house on the market. So that's a pretty big change in thinking, right? It's like people are adjusting to this new normal.
Yeah, it is a big shift because for a long time, a lot of homeowners who already had a mortgage, they were hesitant to sell because they probably had a much lower interest rate locked in, on their current mortgage. So if they sold and then had to buy a new home, they'd be looking at a much higher rate.
Yeah.
But Fleming's point is that as time goes on, these higher rates, they become the new normal, and life events happen, things like changing jobs or families growing, and eventually those things outweigh the desire to hang on to that lower rate. So this increased willingness of homeowners to list their homes, it's a big factor in why inventory is going up.
Right. And Fleming predicts that this is going to lead to, the month supply of homes creeping higher, which should help to, cool down the pace of price increases. So that's potentially good news for buyers who, they've been dealing with those rapidly rising prices.
Yeah, definitely. And, it's worth noting that First American's Real House Price Index, it's already showing some improvement in affordability compared to a year ago, and that's largely because of this slowdown in price growth. So, Fleming's overall expectation is that this trend is going to continue. We'll see slower growth in home prices, but he doesn't think there's going to be a national decline in prices. It's more about, the market kind of finding a new equilibrium.
Okay, so while the purchase market seems to be, getting a little bit of a boost here, the article also looks at what's happening with refinance activity, and it's kind of a different story, right?
Yeah, definitely. It's a good point to make that distinction. So while applications to purchase homes are going up, the applications to refinance existing mortgages are actually going down. And the MBA's Market Composite Index, which tracks the total volume of mortgage applications, is dropped for the second week in a row. So last week it fell by 2%, and that was after a bigger drop of 6.2% the week before. But it's important to remember that the overall volume is still higher than it was last year. It's 33.6% higher than it was at the same time in 2024. So even with this dip, there's still more mortgage activity happening overall.
Yeah, so even though we've seen this recent dip, the total amount of activity is still higher than last year. But the refinance index itself, it also went down. It dropped by 5.3% last week. And that was after what the article calls a boomlet earlier in the winter. So, it sounds like that period where refinancing was really attractive, maybe it's winding down, at least for now.
Yeah, I think that's a fair assessment. The boomlet probably happened when rates dipped a little bit. It created an opportunity for homeowners who could benefit from refinancing, and so they jumped on it. But with rates stabilizing at this higher level, the incentive to refinance, it's just not there for a lot of people anymore. But just like with the overall market activity, refinance activity is still way up compared to last year. It's up by a huge 63.2%. And that probably reflects the fact that even with the recent increases, rates are still lower than those peaks that we saw in late 2023.
Right. And because of this shift, the share of all mortgage activity that's for refinancing has gone down. So it's now at 40.4%, down from 42% the week before. So it really does seem like the focus in the mortgage market is shifting back towards people buying homes, rather than people refinancing.
Exactly. And one more interesting thing to point out is that even though, Government-backed loans are a big driver of this increase in purchase applications. Their overall share of the lending market, it didn't change that much from week to week. So FHA-backed mortgages, they stayed at 16.5%. VA loans went down just a tiny bit to 14.5%. And USDA loans went up slightly to 0.6%. So, this tells us that while they're definitely fueling the rise in purchase activity, they're not, drastically changing the overall makeup of the mortgage market.
Okay, so let's try to put all of this together. We've got mortgage rates that are basically staying put. They're not really going down, but we're seeing more people applying for mortgages to buy homes. And it seems like this increase is mostly being driven by more activity in the government-backed loan sector, which is probably getting some help from the fact that there are more homes available for sale. And at the same time, the market for refinancing mortgages, that's cooling down a bit after being pretty hot for a while.
Yeah, I think that's a really great summary. The takeaway here is that the housing market is this super complex system with all these different factors interacting with each other. And, even with interest rates that are relatively stable and still, kind of elevated, this combination of a slightly better supply of homes and this underlying demand that's still out there, particularly, within this segment of the market that can access those government-backed loans. It's leading to more home purchases. This is all happening while, the motivation to refinance has kind of faded away for a lot of homeowners.
So for those of you listening, here's something to think about based on all of this. What could these trends mean, in the long term for different parts of the housing market? And for anyone out there who's, thinking about buying a home, consider how these increasing inventory levels, the challenges that we're still seeing with affordability and the different financing options that are out there, how might all of these things evolve in the next few months? What questions does this deep dive raise for you about your own plans? If you're thinking about buying a home or just about how you understand what's happening, in the economy as a whole. It's a really dynamic situation with a lot of moving parts.
Yeah, I think that's a great point. It's definitely something to keep an eye on and, see how it plays out.
Thanks for joining us for another deep dive.
Yeah, thanks everyone.
Catch you next time.